I think the big thing is, I mean, as unnerving as they can be, they are normal. They're not fun, but they are normal. The question is how do you navigate through this? And so when you take a look, Tommy, and put things into perspective of the ups and downs of the market, I think this is really good to show because, I want you to dial in on this because, again, if you take a look at the S&P 500 with the market declines, I mean, even with up markets, you do see these downturns.
Yeah, it's very normal to experience a pullback, and sometimes pullbacks can be healthy. They can work off some of the excesses or renew buying power. But yeah, you look across going back to 1980, a 40-year period, 1980 to 2020, the market has experienced some level of down in each of those years, sometimes more than others. And by and large, you look across that chart, the market has ended up positive. And in those positive years, you still can get a pullback. So it's really important to, there's several studies out there that have shown, the feedback cycle or the frequency of feedback for those people that, are looking daily, looking monthly versus looking at that kind of annual to long-term perspective. You could be better off kind of ignoring some of that day-to-day, month-to-month noise, keeping that long-term perspective.
Well, that's exactly right, because it is really hard to sit still. I mean, that's the big thing, because you can't help but to think, Tommy, should I be doing something? Should I be doing something? Because if you're seeing something going down, what should I be doing? But I think the first thing is especially when you're navigating, market volatility, is try to resist the urge to sell based on recent downturns.
Well, I mean, everybody's heard the you buy low, sell high.
It's easier said than done.
That is the perfectly rational decision. Today,
right.
We're talking about the emotional side of it.
Right.
People tend to find a level where they say, I can't take any more, I'm done. Oftentimes that is at or near the bottom. And so it's really important to, you sit down, you put a plan you feel comfortable with and a plan you can stick with. And not make those, interim decisions or the short-term kind of irrational moves.
Right, and also making, making these losses permanent, in terms of where it could be just temporary. But again, you're right, because it's just what I said earlier. We all have that emotional attachment to money, and so by having that plan, that will help navigate you through those tough times, right? How can we weather this storm, especially if you're living on your portfolio? Because a lot of our clients, they're pulling from their accounts. Right? That's why we talk a lot about drawdown in terms of how much you pull from your portfolio, because we don't want something high where, for example, if the market's going down, you're taking the withdrawal, we're just hurting that account. So that's why you build those emergency funds and you have that plan, just like you said.
Right, and that gets into kind of the bucket approach, where if you are supplementing income with your portfolio, having, is that a year or 2 years kind of excess cash or some set aside cash available for those emergency large purchases, where you have the flexibility, portfolio's doing well, maybe it's going up, you can continue to take those withdrawals, but at the time it goes down, you're not accessing the funds for a large purchase.
Point is just to take a long-term view. I mean, what we need to do is be long-term focused, but also near-term aware. Thanks for watching Retire Vivid. Want to see more? Like and subscribe to our channel to stay up to date with exclusive Vivid content. Plus, be sure to watch our show Retire Vivid every weekend. We're here to help you get retirement ready.